watching Your Trades on ET Now with me, Shreyanshi Singh, and with me is Priyanka Uppal. And over the next half an hour, we will help you make sense of the day gone by in trade. Then, firstly, let's take a look at the market and see what that was up to, because it was a largely slow day of trade coming in, Priyanka. You know, when you take a look at the Nifty, closed just shy of that just about 25,800 level, and that is something that we saw coming in. When you take a look at what happened on a sectoral basis, of course, you do have the laggards from the energy, PSC as well as commodity space. Not much action when you take a look at the broader markets as well. They were also quite tepid in trade as well. When you take a look at the gainers, of course, you do have the media index and the IT index that was holding up quite well. You did have some of those names that were buzzing away in trade. From all of those indices, of course, you did have Infosys that was buzzing away in trade. Gains of about 1.5% coming in for that one. HCL Tech as well from that index, and LTI Mindtree also holding on, clutching on to just some of those gains, along with TCS as well from that index. When you take a look at what else was really happening in the market, of course, you did have a whole host of gainers coming in from the banking space, because you did have Kotak Mahindra Bank that did quite well for itself, SBI as well. But when you take a look at the list of laggards, lots of laggards in trade. When you take a look at Bajaj Auto, from the auto pack, there was Eicher Motors as well, and a whole host of those companies, Maruti Suzuki as well, on the back foot just a tad bit. When you take a look at Titan as well from the consumption pack, was joining some of the other names from the pack itself, the likes of HUL that were not doing all that well in trade as well, from the metals pack as well. Some of those counters were on the back foot, the likes of Tata Steel. Some of those counters that we've seen doing quite well earlier this week did not do all that well, and that is the kind of move that we saw coming in. Now, in terms of what else happened and the other stocks that were buzzing away in trade, of course, it's important to take a look at India Glycols, because that stock was up 6% on that capacity addition as well. NCC also buzzing away in trade, but a whole host of companies that we were keeping on our radar. Now, of course, there's Hyundai Motor, India's 25,000 crore IPO, and that is the one that's gotten that SEBI approval, and that is the one that will remain in focus as well, because it's really looking like the primary market action is really heating up at this point.
All right, absolutely. In fact, you know what, Shreyanshi, we were kind of market participants were anticipating a consolidation phase. That's what we spoke also yesterday, and that's clearly what you saw. In fact, banks were dragger, but then not much of loss which came in. If you talk about many of the spaces, let's just talk about several the key specific, the new specific spaces. First of all, it will be the gold financing companies. Now, RBI spoke about few of the observations about the gold financing companies. They spoke about that they've observed several irregularity practices in loan against pledging of the gold without presence of the customer, due diligence not there. But then it was not a bad hit or a big miss on the gold financing companies, but somewhere the negative impact was capped, because there were notes coming in from Jefferies as well as Morgan Stanley, which talked about that the big company, traditional players like Muthoot, MGFL, they've been audited by RBI periodically, so there are fewer gaps. And so, similar story goes for IFL Finance already. Their stock has already taken a hit, and now they have kept their things in check. Mixed set of numbers, mixed bag came in terms of the auto sales number for the month of September. What we anticipated was, Srishti also told us that two-wheeler space could see some better numbers coming in on the back of the rural sentiment seem better than the urban, and that's what you see, the better numbers came in from TVS and Bajaj. Though that was a separate story, that the discounting factor which is weighing on the auto stocks right now, that's what the auto stocks were down. But then clear numbers, the good set of numbers from tractor sales, more disposable income in the hands of farmers because of the good monsoon, and that's what played out clearly. Couple of stocks on the brokerage notes. Keynes Technology, Morgan Stanley came up with a brokerage note here. Target was revised upwards. Then Aadhar Housing Finance, this was one of the stock which Investec also, it wasn't news in fact, Investec also has initiated a buy rating, and they've spoken about them, they've called them as the largest and the most diversified housing finance also. But then crude, did you notice, Shreyanshi, that it fell below $70 per barrel also? Round about 2.5% of the intraday fall we saw. However, it is hovering near $70. It just regained a little, but then clearly around about 9% of drop what we have seen in crude in the September month. Couple of stocks from chemical and the fertilizer space which you well addressed, but then just one stock I would like to mark here. Significant recovery what we saw in PB Fintech stock, which has been in the news, which is a lot of news around their entry in the healthcare space. Stock got hammered. Management came up with a clarification on now. Jefferies came up with a note and they've given a target of 1800. Now, these are the specific headlines for the day, but then now let's understand that what to make of the markets from this point in time. Index level, what our traders, what the index traders should look at it. We're joining in by our special guest. We have Nilesh today to take us through the Nilesh Jain, who's a head and derivative for the technical research for Centrum Broking. He will talk us that what index level to eye from here. Nilesh, welcome to your trades. What do you make of the markets right now? Some consolidation was on the cards, the kind of move we saw, and now the kind of trend which is coming in from the derivative space. Short built up on Bank Nifty also long unwinding. We saw a big sell-off came in from FIs also yesterday. Has the trend reversed for a bit?
Very good afternoon to you, Priyanka. It's too early to call it as a trend reversal. We need a conclusive evidence for that, but that doesn't seem to be the case as of now. We are in the typical bull market, and this is merely a kind of a profit booking that we are witnessing. Today was a good day, I would say, although we have seen some long unwinding and build up on the short side in the Bank Nifty, but still I would say that we have seen some positive development. If you look at the volatility index, India weeks, which corrected almost 7% today, and it is very much in the comfort zone for the bulls below 12 levels. So that is not giving any indication that we might see any kind of correction from here. Even if you look at the derivative data, we have witnessed fresh put writing at 25,700, 25,600 strike, whereas the call writers are very much active at 26,000. So looking at the data setup, it looks like more sort of a consolidation, and once this consolidation gets over, we may see another leg on the upside. Now today, we have seen some amount of consolidation, but the broader markets have outperformed, and that is certainly giving some confidence. Nifty is still trading well above short-term and long-term moving averages, and I would be on a long side. If at all we see any dip towards 25,700, that could be a good entry point, keeping a stop loss below 25,500, and a target from this week's point of view comes around 26,000 to 26,100.
Those are the levels that Nilesh is highlighting as well. But Nilesh, I'm going to come back to you because I believe that there's a chemical player that makes it to your list of recommendations. Which are the other recommendations also that you have for us?
Right. So stock-specific action is something that we are witnessing, and we are expecting this stock-specific move to continue. So as you mentioned, sectorial point of view, chemical stocks after a long time of consolidation have now started witnessing some amount of positive move and attraction. So within chemical space, Tata Chemical is one specific stock where we have witnessed a good reversal in the trend. And also this particular stock has given a good breakout from its falling trend line. And even if you look at the derivative data, almost 12% fresh OI addition can be seen. So good long build-up is happening here, and a good price and volume breakout as well. So we expect this momentum to continue for the next 2 to 3 consecutive sessions now. Stop loss can be placed below 1110, and the target on the upside comes around 1170. Apart from that, MNC stocks were also in focus and were in actions. ABB is one specific counter where also we have seen good build up on the long side. So this stock has given a good close on the closing basis with a good breakout. So we expect ABB to move towards 8700 kind of levels on the upside. 8070 would be the stop loss.
All right, thanks very much. So ABB and Tata Chemical, the entire chemical, agrochemical, fertilizer pack, that was buzzing in trade today. Thanks very much, Nilesh, for both the trades and highlighting the rationale behind the target that you gave to our viewers. Moving on, even Srishti we have with us. She'll also highlight two stocks which she spotted on the charts for us. It's a combination, Srishti. What is it? Because of course the market is not giving very clear direction right now.
Well, certainly. So two counters on the breakout side is what we have spotted, because a lot of action was from the broader market space. One such stock is Chambal Fertilizers, though the whole agrochemical space was buzzing away. But Chambal Fertilizers look really interesting on the charts. Why so? Because for today, you will see that the stock finally managed to break above its key resistance of 540 odd levels. Though the stock has been in the up move for the past 3 to 4 days, but you will see that every time it used to face a resistance around these levels, but the stock was also consolidating in a very tight range. And key to note is that whenever a stock actually consolidates for a long time, makes a range for itself and then breakouts, then that confidence is even more. And for that we have spotted Chambal Fertilizers, wherein for today, after already having a stellar move, there was indeed long build up seen on the derivative side. So this is the first stock on the breakout side. Moving on to the next one then, and on the charts, the next stock that we wish to highlight is also from the broader market space, though we are just waiting to get the other chart, but that's from the IT space, and that is Coforge, because for now you will see that it's sort of a similar type of a consolidation is what we have witnessed in Coforge, because from the IT space, the stock was seen to be consolidating in a very tight range for the past 2 weeks. You will see that the stock has absolutely done nothing, but it did end the day at the highest point and has been taking a support at its key moving averages, and yet again after the consolidation it did take a bounce from its 20-day moving average, and hence the breakout. So these are the two stocks on the breakout side. Back to you guys.
Alright, then a couple of breakout counters are the ones that made it to Srishti's radar today. But moving on then, let's get you the word from the wise. Speaking of Capex, Vijay Raghavan Swaminathan, Executive Director, Equity Research at Avendus Spark Institutional Equity, says that the best of government Capex growth is largely behind us and the private Capex theme is yet to play out. Listen in to what he had to say there.
If you look at the last 6 months, what we have been recommending is the government is clearly very particular about consolidating their fiscal deficit targets. So as a result, both central government capex and state government capex, incremental growth is going to moderate. This is pretty much our thesis pretty much at the start of the year. But that will get balanced out by combination of private capex recovery. So what we are effectively trying to say is the best of the government capex growth is largely behind us, whereas the best of the private capex is still not played out in our assessment, especially from the large sectors like power, metals, semiconductors kind of sectors are meaningfully participate in a private sector capex recovery.
So private capex theme is clearly playing out. That's what the big market veteran market voice is coming out like. Now move on. As we move on into a new month, let's take a stock of how market have fared out in the month of October over the last 10 years. Indices, stock and sectors, a comprehensive analysis. Let's take it across to Ashesha, who will put things into perspective for us. Ashesha, over to you.
October, in fact, is the month which has shown strongest seasonality over the last 10 years. First up, let's talk about individual sectors and how they've performed. Nifty has given an average return of about 1.7% over the last 10 years. We have Nifty Mid Cap Index, average return of 2.1%, and Nifty Bank Index. In fact, this has bucked the trend with an average return of about 3.9% over the last 10 years. Nifty ended in the green in 8 out of the last 10 years, Nifty Midcap 9 times, and Nifty Banking Index has ended in the green 9 out of the last 10 times. Let's also talk about individual sectors and how they've performed. PSU Banking Index is bucking the trend with an average return of 7.3%, followed by private banks, 3.7% average returns. We have financials, auto and real estate with average return anywhere between 2.7 to 3.5% in the month of October. Only 2 sectoral indices have ended, or rather have given an average negative return. FMCG Index, which has given a negative return of 0.5%, IT Index, which has given an average negative return of about 0.3%. Let's also talk about individual stocks, and we've picked up 5 stocks which have closed in the green at least 8 out of the last 10 times. We have Canara Bank, average return of about 13%, Delta Corp and TVS Motor, average return of 10%, ICICI Bank and NMDC have given an average return of about 8% over the last 10 years. Let's also talk about the losers then. We have picked up 3 stocks which have closed in the red in at least 7 times out of the last 10 years. Vodafone Idea, average negative return of 6%. Followed by Astral and Biocon, which have given negative return of 3%. But yes, October has proved to be the strongest month when it comes to seasonality, and index returns have also been quite decent.
Alright, then there you have it. So that was a comprehensive take coming in on October seasonality. Time for a very quick breather on the show. When we come back, we'll take a look at the big story of the day, so don't go anywhere. Welcome back. Thank you so much for staying tuned into your trades. And as promised, we'll of course be going to the big story of the day in a bit. But let's take a look at the derivatives roundup and see how that is shaping up. When you take a look at the September expiry, when you take a look at the trend then for Nifty, you're looking at a largely flat trend coming in for the Nifty. But when you take a look at the Bank Nifty as well, there's some mild short build-up that was also observed. Let's also take a quick check on what the India VIX was up to, because it was around those 12 levels. And what you did see is that it did crack about 6.2%, and that's the kind of move that you saw coming in on the India VIX as well. Let's also take a look at active call levels for 3rd October expiry. Then when you take a look at call writing, that was observed at 25,800 as well as 25,900, and it was interestingly the 25,900 level that was also forming a strong resistance level. So that was what the active calls pictures looks like. But when you take a look at the active puts as well, put writing was also observed at 25,700 as well as 25,600. So at this point, this is how the derivatives roundup is shaping up like.
All right, so seems like not much damage done. Lower strikes have not been gone into writing much. Similar trend what we saw yesterday also. But then yes, of course, we are spending some time here. Moving on, RBI has observed several irregular practices by gold financiers and now asked them to review their policies and also undertake a portfolio review. My colleague Varun joins in with all the details on this. Varun.
So in the past, we have seen RBI is actually closely monitoring the gold loan companies and the loan given by these companies, and now RBI has come out with several observations where they say that there are irregular practices in gold against pledge of gold ornaments and jewelries, and there are shortcomings in use of third parties for sourcing and appraisal of gold loans. Also, there are irregularities in undertaking valuation of gold without the presence of customers. There are issues with due diligence, lack of end-use monitoring of gold loans, and also loan-to-value ratio and incorrect application of risk weight. So these are some of the issues which RBI has highlighted on gold financing companies. But brokerages have a different view. They say that this would definitely lead to some slowdown in gold loan. That is expected because of the strict action or the observations by RBI. But they think that the entities with lesser vintage in lending against gold jewelry could likely have more deficiencies, and companies like Muthoot and Manappuram, which have been regulated by RBI for many years, they are likely to be positioned better. There might be some risk and there might be overhang on the stock because of this news, but they still are comfortable with these companies, and between the two, they think that Manappuram would have a good safety of margin of safety. Jeffries say that the traditional gold loan financiers like Muthoot and Manappuram Finance, they have been audited by RBI periodically and they have very fewer gaps. Also, when it comes to IIFL Finance, they say that it should be unaffected because they have already taken corrective measures. So the listed gold loan companies, no doubt they would have an overhang, but most of them are good, highly regulated by RBI, and there are periodic checks which have been done. So if there are issues, there might be with the entities which have lesser vintage in lending against gold. But yes, there would be overhang on all the gold financiers, at least for today.
Well, absolutely. Thanks, Varun, for that lowdown on gold financiers. It was Muthoot Finance as well as Manappuram Finance that were under pressure, but there was a whole host of counters that were buzzing away in trade, the likes of Star Cement, Greaves Cotton building onto those gains. Gaurav is standing by with that entire list. Gaurav?
Well, yes, Star Cement is going to be in focus because one of its subsidiaries has been declared as a preferred bidder for limestone reserves in Rajasthan. Now, these blocks will have capacity of around 64 million tons of limestone. As a result, we saw some uptick in this counter. Next, we have is Greaves Cotton, because the Greaves, one of its subsidiaries which deals in electric three-wheeler vehicle, has now partnered with Shriram Finance, and they will offer customers tailored financing services. As a result, we saw some uptick in this counter as well. Next, we have is Century Textile, because Birla Estates Trimaya Phase 2 project in Bangalore has now achieved almost 95% of the inventory sellout in the 24 hours of the launch, and they have achieved almost 600 crores of booking value. They say that the project is anticipated to give revenue estimate of around 3,000 crore rupees in a few coming quarters, and as a result we saw some uptick in this counter as well. Next we have is ABB India, because now IIT Bombay has partnered with ABB India to set up a state-of-the-art electrical machines and drivers lab. As a result we saw some uptick in this counter as well. And lastly, let's also focus on PB Fintech, because Jefferies has now maintained its buy rating and a target price of 1800 rupees on this counter. What they say is that the management has now quantified that they will be investing not more than $100 million in the new business, and the clarification actually addresses the concern of investors. As a result, we saw some uptick in this counter as well. So definitely watching out on all these counters on the back of the news flow as well as brokerage report that we have received today.
All right, thanks very much for all those stocks. Of course, PP Fintech, we saw a fantastic recovery coming in on this brokerage note also. Thanks very much, Gaurav, for all the list of stocks you spoke about. Moving on, of course, with the way the China economy is being giving stimulus, of course, it's a relief rally for many commodities. But then what do market veterans have to say about it? We caught up with the Adrian Mowat, equity strategist for EM, and he said that the China's mega stimulus is more of a relief rally in many of the commodities. Let's listen into that exclusive slice.
The Indian bull market has been very much driven by local investors, but specifically looking at the FII fund flow impact here, I think there are two stages to this. At the moment, if you're running EM money and you've been outperforming, you've been very overweight India and underweight China, all that alpha has disappeared in the last week. MSCI China total return is up about 30% year to date. India's up a very respectable 26%. I would see this as more of a relief rally in the commodities space rather than that's something that's going to be sustained. It may have more of an impact on precious metals, but I think for the underlying fundamental base metals that are going into manufacturing activity, its impact is going to be relatively modest.
All right, and that's the word coming in from Adrian Mowat, but let's move on. Let's also get to the word coming in from Manpreet Gill of Standard Chartered Bank, who also shared his outlook on China's mega stimulus. Listen to what he had to say then.
As an economist, I'd say, look, these are absolutely, I think, very significant measures. And I think more than the PBOC measures themselves, it's the expectations that have been set in motion that there may be more to come on the monetary policy side. But more importantly, I think what I'd be excited about is the signaling from the Politburo that there's more, reviving growth and sort of really providing more support to the economy is becoming more of a fiscal priority. Because one additional factor I'd add is on oil prices, because while metals might be the positive, if we do see improved sentiment in Chinese demand, that could potentially start to tilt the balance a little bit in favor of slightly higher oil prices.
All right, so more of an easing of the commodities, that what is being seen as largely from many of the market experts. Well, that's a wrap on this edition of Your Trades. We have a truncated week, so Shreyansi, a day for you to go easy on the day, sleep more, eat well, and see you on Thursday.
Absolutely, and you as well. But with that, we're completely timed out.
Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.